right? So just wanted to highlight something I saw in the news today, and that's the fact that on the America side, they are planning to open up the baseball season again. I guess everybody has different priorities, because based on what I know, the rest of the other countries are actually more worried about a second wave in terms of the coronavirus. But all right, America's got a different set of priorities, and we can't blame them, right? I mean, maybe they already have a vaccine, maybe they already have an effective treatment for the coronavirus, so they are not so concerned about, a second wave. I'm not sure. All right, but that was what I heard. And unless they got a vaccine and an effective treatment, my bet is on a second, third, fourth wave. That's my bet. All right, and I'm gonna apply that bet to whatever I see in the stock markets. That is the overall stance that I'm taking as an investor. All right, in this market, I am betting. I am taking my side of the fence, on the side of the fence that says there will be a second, third, fourth, fifth wave. All right, this illness, until the day that it's fully eradicated via vaccine or complete herd immunity, it's going to become a norm in our lives. Masks are going to become a norm. Social distancing is going to become a norm. All right, your food delivery is going to become a norm. Home fitness is going to become a norm. Working from home is going to become a norm. There are many norms that's going to happen. All right, watch my videos, read my articles to understand more about those norms. And understanding those norms is essential towards understanding the new world order. And understanding the new world order will help you and aid you greatly in understanding which are the stocks to buy and invest in for the mid to long term. All right. So without further ado, today let's go into our instrument of analysis. Okay, although I'm a stock analysis guy, but sometimes I look at commodities because they give a pretty good indication of where the stock market is going. And today we are looking at the gold. All right, we're looking at the price of gold measured against the USD. So if for those of you who might not know, gold is considered a safe haven asset. All right, safe haven asset. Safe haven asset means people flee to this asset whenever they feel there's a risk of defaulting, there's a risk of losing money in the stock markets, or they feel that there's an economic crisis, they feel that there's an economic recession. Under these circumstances, they will flee to the gold market. So that's what we call a safe haven asset. If you want to know which are the other safe haven assets, just go to Google, literally type in safe haven assets, and you'll know. All right. Go to Investopedia. Right, so you have safe haven currencies. One of those is the yen, the Swiss franc. They are considered safe haven. Gold is a safe haven commodity. All right. If you go to Investopedia, all right, it tells you what are the examples of safe havens. All right, cash, gold, treasury bills, defensive stocks. All right, so these are the categories of a safe haven asset. These are the things that you buy in an economic crisis, and these are the things that you do not buy in times whereby the economy is doing well. There is a bull market and all of the stocks are generally rising. Everybody is happy, everybody is hopeful. You do not buy these stocks. You only buy these stocks when you sense that the mood is about to change. Okay, now let's go back to the chart. So we're looking at gold today. All right, now as per any other analysis, I always go to the all-time chart first. The all-time chart first. All right, you look and judge from the all-time chart, and then from there you decide where you think the market is going. So you can see for gold, number one on the GMMA, Guppy multiple moving average, you can see that the green line over here. green line. Okay, the green lines in the white box have just crossed from below over and above the orange lines. What does that mean? It means that a bull trend has started. This is a bull trend. Okay. Second of all, if you look at RSI, okay, it is definitely in the overbought zone. All right, it is definitely in the overbought zone. So that means that this asset is now heavily overbought. Okay, and then after that, you have ADX, my second favorite tool. You can see that on the overall chart, the current bull trend is still going strong. Okay, how do I know that? If you observe from this part all the way to this part, okay, this part alone, you can see that it's tilting at more than 45 degrees upwards. Okay, 90 degrees is parabolic. Anything as we get less, it's less and less parabolic, but this is still, I believe, more than 45 degrees. All right, and the latest one, after going through this entire period of a climb, although the angle has reclined quite a bit, meaning that it's no longer 45 degrees, but it is still, it is less than the previous angle, but it is still around 45 degrees Celsius, 45 degrees in terms of the angle of inclination going upwards. So 45 degrees basically means that the trend currently is still strong. There is still a strong trend that is going. The strength of the trend is not dying. All right. Now, with that being said, we have, what do you do when there's two indicators that don't agree on the same thing? Okay, you look at the third indicator, and that is the Gabi multiple moving average. That's why I always have a odd number of indicators. So on the trend indicator, you can see that boom. On the volume indicator, you can see that it's bear because now it's overbought. On the direction indicator, that means the trend strength indicator, you can see that the trend strength is still there. So 2 out of 3 indicators point towards a bull market continuing. So for this pair, I will be looking to long. All right, and honestly, on the in terms of the overall environment, like I already said, my bet is on the fact that it's going to be a second, third, fourth, fifth wave. So I am long gold. My stance is long gold. All right. Now, with that being said, I figured out my stance. I'm going to look for buying opportunities. I'm not going to look for selling opportunities. Let's go down to the minor time frame, which is 3 months. All right, 3 months time. So this is the 3 months time frame. Okay, zoom in a little bit. All right, you can see that overall there's an ascending bottom. All right, the ascending lows. Where did I see it? It's around here. All right. There is a clear ascending low trend, meaning the lows are getting higher. That is a clear indicator of a bullish trend. All right. Then, of course, at the same time, the highs seem to be getting higher as well. Forming almost like an ascending channel. So you can see there's an ascending channel, right? So now my goal is to look for a longing opportunity. A longing opportunity with maximum upside in terms of risk to reward. Okay? So the first thing I ask myself is, where is the next resistance level? If you want to look for a chance to long, you need to ask yourself, where is the next resistance level? So you go back to the all-time chart, you can see clearly that the next resistance level is around here. This is the next, the blue dotted line is the next resistance level. After that is this level. Okay, 1916 and 1790. All right, these are the two levels of resistance. Then we go back to the minor time frame. You need to know what is the kind of margin you have before you hit a possible stop to the trend, right? So in this case, okay, pretty good, right? We are looking at a pretty healthy margin. You still have quite a bit of space to go, right? This is the amount of space that you're looking at. You still have quite an amount of space to go before it hits a major resistance. Of course, there is some resistance here as well, right? On the minor time frame. But it seems to have broken that resistance level at 1,736, right? It seems to have broken that resistance level. So you can see that in terms of a major resistance, this is the next major resistance. So it's got quite a room to run, a bit of room to run, all right? So where do I go in? Now that I know the margin that I have, where do I go in? How do I go in, right? You need to wait for a retracement. Okay, you need to wait for a retracement. So how do I find a retracement? Simple. You use the Fibonacci retracement. Okay? So you can see that there's been an uptrend since here all the way to here. You drag it up. Always drag your Fibo retracement from left to right, left to right, left to right. Okay? Left to right. Okay? Even if it's a downward sloping trend, meaning even if it's a bear trend, you drag from the left to the right. That means the high on the left and the low on the right. If it's a bullish trend, you drag from the low on the left to the high on the right. Okay? So in this case, you can see there's a very nice Fibonacci retracement level here. Okay? You can see a few levels, right? For me personally, I'll be looking to enter again on this long trend here. The white box is my target zone, all right? But if, let's say, the price continues to go up without retracing, then you need to adjust the Fibo retracement continually to the most recent high. I'm only putting it here because this is the most recent high. But as the high gets higher, if it doesn't come down, you need to keep adjusting. All right? So let's say it's here and it does retrace. Okay, I'll be looking at between okay, let me just denote it in a different color. I will be looking at between 1,717 to 1,725 to enter the market for a long. And where would I put my stop loss? I will put my stop loss around here. Just below the white box. That red box there will be my stop loss zone. And then where will be my take profit zone? First take profit will be to the recent high, which is around here. So the green box is where I take profit. Honestly, if you ask me now, if it retraces now, your risk to reward ratio is not great. Maybe 1 to 1.8, 1 to 1.9. It's not great. Okay? So what I'm hoping will happen is this, is that it will continue to go higher. It will break past this area. It will break past this area. Okay, let me just zoom in. It will break past the pink circle area and out of the channel, continue surging higher before it retraces. That is how you get a better risk to reward. All right, so those are the entry recommendations. Remember, any action you take upon watching this video is solely your own, on your own obligation, on your own prerogative. All right, this is not a solicitation to trade or invest. All right, had to say that. There's an investment disclaimer. I had to say that. All right, so this is what I see overall for gold against the USD. All right, honestly, I'm hoping it doesn't retrace now. I want it to go a bit higher before I enter so that my risk to reward is better. Okay, so that is it for gold. Now, the thing is for gold, although my bet is on the second, third, and fourth wave, which will definitely lead to a fall in the stock markets and a rise in gold. That's my bet. That is my inference. That is my personal outlook. Okay? But let's say you want to craft your own outlook. Where do you go? All right, you can look at these websites. FX Street, all right, this is where you look at some of the important news that's happening. Okay, you can go to investing.com. It will tell you all of the gold related news. All right, then from there, you actually analyze. You can go to Bloomberg. All right, but Bloomberg only tells you the price. Okay, but you should constantly check Bloomberg because they may have news regarding gold prices. All right, you can go to Daily Forex as well. All right, it tells you their outlook. So all these websites give you their own outlooks on gold. Now, after reading through all these websites, it is up to you as the individual to come up with your own outlook, and from there, go into the market. So with your own outlook, after reading all these articles and your own technical analysis using the indicators, from there, you'll get a much better sense of the market and where you think the market will go. That is how you formulate a trade. That is how your thinking process should be like. All right. Thank you very much. My name is Jefford Lim. Thanks for watching. Subscribe to Rubik's Academy. Subscribe to my channel for more content. There will be content regarding other types of courses. There will be content regarding other subject matters. I'm the finance guy, but we have other trainers specializing in other fields as we go along. Okay, thank you very much. My name is Jefford. See you in the next episode.